Hello, there are 5 important news this week. News for the week of November 28th. The November employment report of the US, which will be announced on Friday, will be the most important agenda item next week. Investors are hopeful that the Fed will slow the rate of rate hikes. Fed Chairman Jerome Powell's midweek statements will be watched closely. PMI data will also be on the agenda due to Eurozone inflation data and concerns about the resurgence of COVID-19 cases in China. Here's what you need to know to start the week. 1. Non-farm employment. Expectations that the Fed might soon slow down the pace of its aggressive policy of interest rate hikes were strengthened by the minutes of the central bank's November meeting last week. The jobs report for November, due Friday, will test these expectations. Economists expect the U.S. economy to experience the smallest increase since December 2020, adding 200,000 new jobs. The employment report is also expected to show that the growth in average hourly earnings is moderate, while the unemployment rate is expected to remain just above the 15-year low at 3.7%. This will be the last non-farm payrolls report before the last Fed meeting of the year. But investors have reason to be cautious. 5 of the last 6 jobs reports came in better than forecast, and another strong reading could spell trouble for U.S. stocks. 2. Fed speech. Fed Chairman Jerome Powell will discuss the economic outlook in his speech at the Brookings Institution on Wednesday. Powell said the Fed may raise rates by a smaller amount next month, but said rates may eventually need to be higher than they think will be needed next year. Meanwhile, St. Louis Fed President James Bullard and New York Fed President John Williams will make statements on Monday. The economic calendar also includes the ISM manufacturing PMI and the Fed's preferred inflation measure, the Core PCE, Personal Consumption Expenditures Price Index, both of which will be released on Thursday. Other reports to be published during the week include ADP non-farm employment, initial unemployment applications, consumer confidence, and Fed's base book reports. 3. Retail stocks. With Wall Street reopening after the Thanksgiving holiday, investors will focus on how retailers are spending the holiday shopping period and the Fed's next steps. In the environment of high inflation and slowing economic growth, Black Friday started. Retailers are offering hefty discounts in both online and physical stores, which is likely to impact profit margins in the fourth quarter. Online sales in the U.S. rose 2.3% to $9.12 billion on Good Friday, according to a report released Saturday by Adobe Analytics, but the percentage increase was well below the current 7.7% annualized inflation rate. U.S. retail stocks have become a barometer of consumer confidence in the face of inflation. So far this year, the SVEP 500 retail index has decreased by around 30%, while the SVEP 500 has lost 15%. 4. Eurozone inflation rate. Although there are temporary signs that inflation may peak in the US, the Eurozone inflation data to be released on Wednesday are expected to show that the price pressures in the bloc remain strong. The Euro area CPI rate, which reached 10.6% in October, is more than 5 times the 2% target of the European Central Bank, ECB. ECB took its most aggressive political step since July, raising interest rates by 75 basis points to 1.5% at its meeting in October and increasing the minutes from the ECB's October meeting were released last week, showing that policymakers were not fully agreed on the final target or pace, although they were adamant that rates should rise further to help curb inflation. Market expectations fluctuate between the ECB's 50 to 75 basis points increase on December. 5. China's PMI data. As China grapples with a record number of infections and new lockdowns, hopes for the world's second-largest economy to reopen in the first quarter of 2023 have faded. While general restrictions continue to suppress economic activity, the PMI data to be announced on Wednesday will be closely monitored. Officials said they would continue virus restrictions despite the growing public backlash and the growing strain on the economy. China said on Friday that banks will reduce the amount of cash they need to hold as reserves for the second time this year and offer liquidity to support the faltering economy. I wish everyone a profitable week. Don't forget to like the video and subscribe.